Yo, what is up, y'all? So it's Cruise Trades, and you probably know me from Road to Success. That's my Discord, right? But today we'll be going over a trade recap that I took yesterday. So the trade recap that I took today, so because I'm making it today on Thursday, February 19th. So the trade recap from today should be up already, and feel free to check that out. But yeah, let's get into the trade recap from yesterday, Wednesday, February 18th. So if we look into here into the SPY chart, going into yesterday, what was I thinking? I was thinking, oh, we're probably going to be a bit bearish. Why? Because you can see here we gapped up, right? We gapped up a bit and we were playing right into this 4 hour fair value gap. So what does that mean? That just means there's a lot of sellers here, as you can see. And I mean, it was expected, right? Because the idea was after the move from here all the way up here, using the Fibonacci retracement tool, we ended up deciding that this for 4 hour for value gap could have been played or could have been played. We could have played off of it, and we ended up doing that, right? So as you can see here, we ended up bouncing off this 4 hour for value gap not once, not twice, not three, not four, five, 6 times, right? So we ended up doing that, and zooming in and looking into yesterday, the trade that I took, and I alerted it with the Discord, we did this, right? So looking in, we gapped up, and what did we do? So let's look at the 15-minute first, so that we can see what happened in the pre-market. Pre-market, we gapped up, and we had this move, right? We had this move up. We ended up coming down here to equilibrium, as you can see, like around 0.618. Let's see. Yeah, like 0.618. We came here and we tapped into it. We bounced off of it, but I actually played puts. Me and a couple guys in the Discord ended up playing puts. Why? So yes, now we basically from this move, this gap up, we ended up bouncing off of equilibrium, right? So now the idea was price is going to equilibrium from the upside from the top up here all the way to the low that it made. That move has to come back into equilibrium and at least play out just for a little bit, right? So ended up playing this 15-minute. No, what was it? The 5 minute? I believe it was the 5 minute. So yeah, so it was let's see. This is a 3 minute, as you can see, right? We have this 3 minute for value gap here. I'm just gonna label it gray for value gap. We have that 3 minute right there, as well as we have the 5 minute right here. So I'm gonna label it here. 5 minute FVG, so fair value gap. A fair value gap, for those who don't know and are new to this, all it means is it's an area where there's more buyers than sellers or sellers than buyers. So a bearish fair value gap or a fair value gap that's red is a fair value gap. Okay, so hold up. So let me show you with this. This 3 minute fair value gap here, any of these two fair value gaps, all they are there's more sellers and buyers. So then there's more sellers pushing price down, and buyers aren't as strong to pump the price up, right? At least looking at it from this time frame, because everything is fractal, meaning like what happens on the 5 minute also happens on the 4 hour, but it just takes a bit more time on the 4 hour to actually play out rather than the 5 minute. Hence why we trade as day traders on the 5 minute or 3 minute or just any time frame that's below like the 15 minute probably is the best for day trades to be like in and out scalping trades. But if you're a swing trader, you probably look at these trades and like all this, but on like the 4 hour or the daily, or the weekly. So with that in mind, we know there's more sellers than buyers here. Now we also know that price has to kind of come back to equilibrium, like it wants to. And so what happens? We have this 3 minute overlapping with this 5 minute, and we also have this equilibrium. So like the fib level. So what do? I wait for a reaction, of course. Nothing, I'm not like entering too early. I'm waiting for a reaction, and we ended up taking this trade right here. So we took it like this, and the idea was we weren't going to hold forever, right? We were going to because yeah, the idea is to trade all and target all the way down here like this low of day, but realistically speaking, we are bouncing, we are in between levels, so it's kind of, you know, it's not 50-50, but there's the odds aren't fully in our favor as opposed to like if we were fully in a downtrend or something like that. So the idea is to scalp this. And where did I scalp it to? I scalp it to the 0.5 of that move. You see, are you getting the sense of like I trade the Fibonacci retracement to identify like the equilibrium and where price can retrace to after every single move. So if we make a move up, then we can have that retracement to that 0.5. But after that move up, we also have that equilibrium from that move up to the retracement to the 0.5 of the move. So let me show you real quick, just right here, just because, um, yeah. So here we have this move. We have equilibrium, say somewhere here. Well, look at this. Price would typically go something like this. Equilibrium somewhere here, but then after that, we can see some sort of reaction, maybe not a crazy one, but a reaction off of equilibrium from this move. So you could see something like this, something like this maybe, and then we kind of hesitate, and then we continue higher. This would be an like a normal thing if, you know, price is bullish or if we're bullish on the day and whatnot. Or other times we can see just price completely shoot down, right? It's all situational, but the idea is the fib level works. So I entered somewhere here. I think I entered here or something, and I took my profits here. No, where did I enter? I remember it being like a one to two, something. Yeah, I think I entered here. Once this fair value gap got respected with this 3 minute here, right here, we respected it, and you see the candle right there. Respected once, respected twice. So then once I saw this go up and then respect, I entered immediately here. And I just targeted, like I said, that equilibrium level and set my stop loss to like either the 3 minute fair value gap, like a candle close above it would stop me out. So anything like this candle right here would have stopped me out, or just like a candle close above here. So that's the idea behind that trade. Ended up being like a 3 or 5 minute trade and took like 20% off of it. But yeah, that was it for that trade from February 18th. So yeah, catch you guys in the next one. Peace and God bless.